But genius is kind of the beginning. It means that we now have more work to do in terms of actually defining, getting kind of the rules of the road clarified. And I think that tied into what Chair Atkins was saying on Monday about the promise of DeFi, and that's what I'm talking about, the next frontier. This is really just the tip of the iceberg, but DeFi is really the promise. But DeFi is really the promise. But
I think DeFi has been here for over half a decade, a little bit more, and every single kind of market stress really proves how decentralized finance can be extremely resilient and a financial infrastructure that can be scaled. As of today, for example, Aave has 50-60 billion worth of net deposits, 15 billion in stable coins, and 30 billion in borrow volume, and it just showcases the scale of where DeFi is today. And that resiliency is something that doesn't go unnoticed. I think now we're also entering into a phase of embedded DeFi where we'll see companies and fintechs and traditional finance actually looking into DeFi and trying to figure out how this could actually benefit their businesses by providing alternative yield sources, alternative utility, and also giving a response to a macro conditions where interest rate markets are going down at the moment by Fed, and probably will continue having rate cuts over the next 18 months.
Alrighty, everybody, what is going on? Welcome back to another CYPRX video breakdown. This is going to be part 2 of a previous video breakdown, continuing to show you all that DeFi's resilience screams mass adoption. Large institutions are coming, and now is the time to pay very close attention. Those who choose to ignore it, unfortunately, will be left behind. Those that choose to adopt it and integrate it into their strategies, into their everyday financial habits, are going to build unimaginable wealth at their fingertips. And so listening to what Stani from Aave just said on stage at a recent panel discussion that took place just a couple of days ago, that goes hand in hand with what I said to you guys in the first portion of this video breakdowns post, where I said for years, DeFi was treated like an experiment, something niche, something risky, but experiments don't pass stress tests, systems do. And what we're seeing now is not hype, it's validation. DeFi is being tested under pressure, and it's still standing quietly and reliably. And when systems prove they work, adoption does not come from force, it comes from necessity. Banks are paying attention, so should we. Now, I want to come back over to this panel discussion. This gentleman here goes on to talk about how the countries and the governments that use DeFi will benefit the most. And this reminds me of something that was said at the Federal Reserve Future of Finance Summit, and something that the IMF director said at the recent Future of Finance Summit that the IMF held all in this year. Take a second and listen.
But I think we could see this from different perspective, that actually DeFi and those blockchains, they are for financial freedom. And it's actually a freedom for protocols, or subset of protocols or subset of users to self-restrict themselves if they think they want it. I mean, we should not deny them to self-restrict themselves because it's freedom. So yeah, but yeah, different entities, different governments would regulate those DeFi and blockchain stuff differently. Some of them will try to regulate it in a hard way. Some of them will approach it from different side. For sure, those who would merge their economies with a permissionless economy, DeFi, they would benefit the most because they would also merge those economies to each other through DeFi.
So what he said on stage, that the governments and the businesses that integrate DeFi will benefit the most, stood out to me. Why? Because that goes hand in hand with what was said at the Payments Innovation Conference in 2025. Here you have Fed Governor Christopher Waller. Listen to what he goes on to talk about, how now is not the time to ignore this technology.
First, I wanted to have a conference that focused on the new technologies that had come from the DeFi and crypto worlds and how they are entering into the mainstream payments ecosystem. My goal is to have a vibrant discussion about payments between traditional payment incumbents and the new entrants from the DeFi world. Second, I wanted to send a message that this is a new era for the Federal Reserve in payments. The DeFi industry is not viewed with suspicion or scorn. Rather, today, you are welcome to the conversation on the future of payments in the United States and on our home field, something that would have been unimaginable a few years ago. My view for the Fed from now on is embrace the disruption, don't avoid it.
So you just heard that directly from Fed Governor Christopher Waller. Embrace the disruption, don't avoid it. Remember what the gentleman here in this panel discussion said: the countries, the organizations, the businesses that embrace the DeFi technology will be the ones that thrive. Well, it's not just these two individuals on stage. It is also the IMF director that said this on stage at the Future of Finance IMF Summit when asked the question, how are you telling countries about this technology and what to do moving forward?
You tell them to embrace it?
I'm telling countries, accept reality. Fiat money is moving digital. The developments in crypto, both unbacked and backed, they're happening with exponential speed. So yeah, you can try to lock your country away from this. Good luck with it. So yes, I'm telling my members, understand it and then decide for yourself how you're going to operate in this world. But do not close your eyes to reality.
Georgine, one of the...
Now, before we play the last video clip for you all, where Stani from Aave goes on to talk about how they're educating institutions on DeFi, I want to again remind you that in this recent JP Morgan published fundamental, they go on to talk about at the end of this that we expect other GSIB banks to follow in our lead to provide clients with greater optionality on how they invest and generate yield. This is huge, considering what Stani from Aave here says.
The average crypto individual.
Yeah, I mean, Aave has been successful on the permissionless world and with this like a native crypto assets. But there's a growing trend on actually seeing securities on chain. And Aave as a permissionless infrastructure can be applied to those assets as well. There's obviously some peculiarities that differentiate RWAs. So typically they're permissioned, so transfers are between qualified peers. And the way we structured our approach with these tokenized assets is that the protocol itself is permissionless, works exactly the same way as the main Aave markets, but the permissioning happens on the asset issuer level. So if there is assets that are securities and needs some qualifications, users go to these asset issuers, acquire the securities, and then they can use them as a collateral in Aave to borrow 24/7 liquidity outside of trading hours. And the stablecoin parts, stablecoin supply is permissionless, which gives the suppliers a new type of a risk profile, lending against traditional assets, but doing that on chain. So I personally think that the future, even for securities, is going to be permissionless. I think that's where the world will go, because the network effects, the benefits that comes from pure DeFi is you can't achieve the same effects by putting obstacles and anything between that. But I think Horizon and all these initiatives in the institutional side, whether it's KYC or any sort of permissioning, is actually works like a Trojan horse. So we educate institutions on how DeFi works. They can get their feet wet, start these markets, create utility around tokenized assets that weren't before. Because purely by tokenizing assets, that might not create that much of a value. But at some point they see that, oh, actually, you know, the real business and real economics and the real cost savings are happening on a permissionless world where liquidity can flow extremely well. And at that point, a lot of these floodgates will be opened. And I think at that point, we'll receive a comfort level not just from institutions, but regulators, that it's actually okay to use a permissionless systems, and there's other tools to mitigate any types of risks that might occur or we see in traditional finance. So I'm really bullish on both of the worlds.
There's the broad question.
So he goes on to talk about how after they've educated institutions and regulators are awake and aware to everything that's happening, they're going to see that DeFi, pretty much in a nutshell, is 10,000 times better than traditional finance, and the floodgates will open, which is exactly why I encourage you all as our followers here at CYPRX to learn about DeFi. You do not have to go out and risk your hard-earned digital assets to learn how to start generating yield. We've taken the time to build the Wealth 28 Club for you guys. You all can always head over to CYPRXtrading.com, tap into the Wealth 28 Club, our entire suite, DeFi University, for you guys to start to educate yourself as we head into the new year. Many blessings to you all. As always, bring you guys some of the realest information in the game. Be cognizant, be aware out there. Remember that you don't need some bull market or bear market cycle to generate cash flow in the digital asset ecosystem. You just need proper education. With that in mind, be cognizant, be aware out there, and I'll see you guys in the next video breakdown.